Give us a sense, because it looked at first when I watched it yesterday like they did all right, actually, in their revenue and things. But then they said, okay, by the way, we're going to issue a bunch more shares.
Yeah, good morning. And by all things considered, the actual earnings release and the actual earnings reported were good news for Beyond Meat. It really is the secondary offering that's pushing the shares down. And, it hurts the value of other investors, and it seems to be a way that, some of these early investors are just being able to get around the lockup period of about 6 months from the IPO.
Yeah, that seemed to be the critical point. They're not going to take that money and plow it back into the company. They're just cashing out a lot of them. Isn't that right?
A good chunk of it is cashing it out. About 250,000 of the shares are being issued by the company, so the revenue from those will get plowed back into the company for, expansion and things like that. But it is a very small portion of the overall offering.
But given the fact that it rose so much over the IPO, wasn't it almost inevitable? It's just too hard to leave that much money on the table. We'll take a look, for example, at the actual share price compared to what the analysts thought it should be. It's just a huge headwind there.
It is, and I mean the stock has had an incredible run. It's about 800% over where it IPO'd. You can't really fault early investors for wanting to cash out. I think it was just a surprise to a lot of to everyone else, and that it came on the heels of such a positive earnings period.